Welcome back to the show. Check out these headlines: crypto crash or crypto boom. Where we're going to take a look at it. Fast forward to 2030, XRP holders, the next one percenters. Somebody roll that beautiful intro so we can find out.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show. You can follow us on X, YouTube, and digperspectives.com for exclusive content. Right now, $3.87 trillion market cap for crypto, and the market's off 2.9%. Bitcoin, 111,200 plus. Ethereum, 3,900 plus. XRP still at the number 5 spot is 244. We're off 5.5 on the 24 and off 18.1 on the 7-day. So here you see, just to go over, Ethereum off 3.4 on the 24 and off 15.9 on the 7-day. Bitcoin's off 2.7 on the 24 and off 10.7 on the 7-day. And Binance is off 10% on the 24 and 11.3 on the 7-day. So the whole market is still feeling the effects from the flash crash, and it may not be over. We'll take a look at it. But right here, we're ranging between 245 and 262. Remember, between 265 and 365 is the noise channel, that dollar noise channel that is just bouncing around. We're below that now. So there is some TA we need to pay attention to based on that. So let's get started. It's iTrustCapital, ladies and gentlemen, and let me tell you something. With the recent market crash that we've had, there's a new theme developing here, and it's called the debasement trade. It means as Bitcoin and gold and silver hit all-time highs, new all-time highs, concerns around currency debasement and global de-dollarization are becoming increasingly mainstream. This is why it's important for you to understand that you can take advantage of all of this inside of your iTrustCapital IRA for crypto and physical gold and silver. You could be doing this debasement trade inside your IRA, getting the greatest advantage out there in the market today. And I tell you, just so you understand how you could do this, and this is why crypto IRA is long-term, secure way to hold digital assets. You can seamlessly roll over your 401k into your iTrustCapital account. Super easy to do. Access 80 plus digital assets plus physical gold and silver, as I mentioned. 5-star rated, industry-leading US-based customer support team. Tax advantage growth with no short-term capital gains exposure, protected from the volatility of active trading and margin positions. Hello, don't leverage, right? And then here you see designed for wealth preservation and retirement planning. You guys get it. Look, I mean, these are, in fact, the best IRAs on the planet, not even up for discussion. You can get started today. And if you're new, you can even get a $100 funding bonus. So click the link underneath the video, itrustcapital.com/XRP Army, and use the code. I'm telling you, this is a great opportunity. You're going to love it. Debasement trade. It's the new theme going around, and you'll see evidence of why. So here we see that breaking, the U.S. government shutdown is now forecast to last more than 35 days. This would make it the longest in history. And then here you see gold is about to enter the tier 5 channel, then a 12-month chop, then $10,000, says the famous investor, Peter Brandt, or technical analyst, I should say, market trader. So Peter Brandt is super bullish on gold, doing a chop and hitting that tier 5 and then chopping around for a year and then busting that $10,000 mark. Now, all of this has been a part of conversations here on this channel about what? About a great reset. Yes. And we would need gold to be around $10,000 or $15,000 an ounce to talk about it, and here we have this. Jim Cramer congratulating Andrew Sorkin for his very impressive book called 1929, the New York Times bestseller, author of Too Big to Fail. Andrew Sorkin has got 1929 inside the greatest crash in Wall Street history and how it shattered a nation. And really, this is the boom and bust cycle that the Fed created, right? And they've been doing it ever since. There's no question about it. So now let's talk about this. This is what we're talking about here, a grand economic reordering. The current U.S. Treasurer, Scott Bessent.
We're going to have some kind of a grand global economic reordering.
There you have it right there. And that's why he took the job, he went on to say. And then let's listen to former CFTC chairman This is Christian Carlo, head of the Digital Dollar Project. Take a listen here.
I think what's happening right now is remarkable historically. Maybe the railroad technology of the 1880s had as much policy-led support as this does. I've never seen as much policy supported support for innovation. Even I was around in the 1990s during the first wave of the internet, when Congress passed some important legislation that was Republican-led, and the White House, Democrat-led under President Clinton, worked very, very well together. And together, they developed a do no harm policy for the early internet, and that was really important. And yet, as forward-leaning as that was, this is even more so. And so I think you're going to have a lot of building of infrastructure, of L1s, L2s, L3s, and the crypto. As your listeners may know, those are the base layers of these blockchain buildings, and then the applications that are built upon that. But then also financing for this technology, because it does require a lot of capital to build it. So all of that is going to take place. Now, even with that policy-led support, that doesn't rule out there might be, and there very well might be, a bubble in prices, and we could have a bubble bursting, just as it did during every technology revolution. You know, the railroad era of the 1880s ended in, I think it was 1897, with a major crash as big as the Depression. And the same could happen. But interestingly, when that crash happened, nobody tore up the railroads.
Right.
Nobody said, that's it, we're done with railroads. The railroad innovation went on. And railroads, we don't use them much anymore, so we don't realize how important it was. The United States was a series of regional economies until the railroad came. We were not a national economy. And we were not a national society because it was the railroad that brought the telegraph, that we could first read about things happening outside of our regional area. The railroad was fundamentally transformative technology that turned the United States from a series of regional economies into the greatest unified economy the world has ever known. Europe is still trying to get the type of economic unity that we achieved a century and a half ago. And so the railroad was very, very important to the United States. And it came with bubbles and busts. And I believe we will have bubbles and busts in this innovation. And when the inevitable bubble happens, there's going to be people out there saying, see, I told you this crypto stuff is bad. No, it's not the crypto stuff is bad. This technology is as important as we believe it to be. It's just that sometimes the valuation gets way ahead of the results. And I think there's always a chance of that, but it doesn't undermine how important this technology is.
There you have it right there. And to add to that, to Chris's points here, and look, just to go back here, crypto is bigger than the creation of the U.S. railroad system. Think Andrew Carnegie, the steel industry, who was one of the richest people in the world at the time, and Vanderbilt's, who built the railroad. Now, you don't want to be like the Vanderbilts long term because they ended up losing their fortune. Nonetheless, let's listen now to Governor Christopher Waller from the Federal Reserve at Sibos, talking about the new digital tokenized railroads.
DLT-based platforms generally, and stablecoins specifically, may also present opportunities for efficiency gains and remittance payments, where today money transfer operators rely on large global networks of agents and have to pre-position capital in various currencies to pay out customers in different jurisdictions. These examples also demonstrate that innovation is not an issue of TradFi versus DeFi, but rather poses an opportunity to harness the complementary strengths that each has to offer, especially at a time when we are seeing increasing convergence, not divergence, between the two. Now, importantly, efficiency will depend on the extent to which DLT networks can operate with one another and with traditional payment rails. This is particularly true because payments exhibit significant network effects. Fortunately, numerous private sector advances in interoperability are emerging, giving this market need And as an operator of core payment and settlement infrastructure, we at the Federal Reserve continue to assess how we can improve our existing rails that serve private sector firms. So let's turn from DLT to AI, the topic du jour for everybody. AI can further improve the efficiency of payments in a number of ways, including through automating manual tasks, detecting fraud or compliance risk, and now with agentic AI executing tasks on behalf of a person or company quickly and cheaply through the use of AI agents. Let's again take the example of cross-border payments, which involve multiple jurisdictions.
Look, I mean, this to me is exactly what Cristian Carlo is saying, except it's the governor, one of the governors of the Federal Reserve saying it. And where is he saying it? Well, what is he saying? He's talking about a convergence, not a divergence, a convergence of this new technology and the financial legacy system, paraphrasing. And he's saying this and giving this talk at SWIFT's SIBO conference, right? That's what's happening here. So this is pretty remarkable. And when you think, as we've talked about here, that September 30th was the day that they were supposed to take the executive order of modernizing the payment system for the U.S. Treasury and America's banks, and they were supposed to start on September 30th, according to the executive order. It's time to put U.S. Treasury on chain. Know your government, KYG. All expenses tracked real time, unaltered, and fully transparent to the public. I have to wonder during this shutdown, is this going to be a reboot onto the new digital on-chain economy when they come back online? I don't know the answer. I'm asking the question, and I think rightfully so. And more to my point of why I'm asking the question is because that implementation that was supposed to start, who has been connected to the U.S. Treasury more than anyone? Well, it's Ripple. Craig Phillips back in 2019, right? Susan Friedman around the same time frame. Here she is right here. And you remember, she served as a senior advisor, former assistant secretary to international markets at Heath Tarbert and U.S. Department of Treasury, where she helped develop and execute strategic priorities related to international finance, services, regulation, investment security, and trade. And then here, you remember, Michael S. Barr, who was formerly a Ripple advisor, went to the Federal Reserve and was a part of the problem with the Biden administration. But here he is. He was also a top Treasury Department official from under former President Obama. So then we have the U.S. Treasurer, 43rd U.S. Treasurer, who was the U.S. Treasurer underneath Obama. Ripple appoints former U.S. Treasurer to its board amid legal fight with the SEC. Look at the deep connections here and ask yourself, we are seeing the modernization and the government shuts down the day after it's to be implemented. We're seeing the call at the SWIFT's SIBO's conference from a Federal Reserve governor that there's a convergence of this innovation with traditional finance. Now, you tell me what in the world's coming next. This is why I say fast forward here. Ripple gets a national bank charter license and a Federal Reserve master account. The Fed is shut out of the new digital on-chain economy because they can't release a stablecoin or a U.S. digital dollar. Circle, Ripple's close competitor, gets a bank license too, but Circle splits 50% of the profits with Coinbase. President Trump gets the interest rate cuts he needs to refinance the U.S. debt. We've already got one. We could have another one this month. Every stablecoin issuer takes a hit on the shrinking profit margin, but Circle still has to split the 50% of the new crushed margin. Because every time we get an interest rate cut, it cuts into the profit margin of every private stablecoin issuer. Thank goodness Ripple has more business than just issuing a stablecoin, but Circle doesn't at the moment, right? Real question. Will Circle, even with its recent amazing IPO, and I hold a position in Circle, will they be able to survive the interest rate cuts having to split 50% of their profit with Coinbase? Tell me how Ripple isn't the Fed 2.0 again. All these Treasury officials, you tell me what we're looking at here. And then we got this news that came out a couple days ago. We covered it on Sunday, came out over the weekend of all things. Citigroup plans crypto custody launch in 2026 after 3 years of preparation as 9 of Wall Street's largest banks, including Citi, develop a G7-backed stablecoin with market projected to hit $50 trillion in payments by 2030. This is where we're going. And I think it looks like this when we get there. In case you were wondering why the maxis get so much heat from the maxis. The world we live in is a spaghetti bowl. The world we're going to has XRP in the middle, and it brings order, a grand global economic reordering. Not financial advice from me or anyone else. It's just my digital perspectives. We're going into the freedom zone, ladies and gentlemen. Today, we're going to continue the conversation in the Freedom Zone on currency debasement. We're going to hear some comments from Warren Buffett, and then I'm going to give you an overview about why I feel that this is so spot on, and that not only are we had the Plaza Accords in 1985, but we're going to have the Mar-a-Lago Accords in the next and during the term of President Trump here. I believe we see this. Let's get inside there right now. It's not financial advice from me or anyone else. Click the link below and come on in.